Chicago. Oliver Slopes with Blue Line Futures. Oliver, a different start to this week, is it not?
A lot calmer than how we started last week, which is a breath of fresh air, and it's a shortened week, so we got that going for us too. But despite last week's volatility, the grain markets really held in extremely well. In that corn market, specifically May, up 30 cents last week. That was the biggest one-week rally for front-month corn since August. So impressive there. Hopefully we can continue to see that momentum continue to gain. I think the thing that a lot of traders and analysts are going to keep an eye on going forward is the springtime and into the summer. It's very important here in the United States, as all your viewers know. So a lot of attention is going to be put on weather and crop progress going forward. Last week, we got the first look at planting progress. We'll get another update later this afternoon. I don't expect that to be market moving news, but the deeper we get into spring and summer, the more impact that it will have or could have on price action going forward. For soybeans, biggest gain since March of 2023 last week, 65 cents in that front month May contract, bumping our head right up against some resistance. 1065 to 1070 for that May contract is going to be a big barrier to get out above. If the bulls can chew through and close above that, I really wouldn't be surprised to see the market continue higher, retest those February 5th highs near 1092.5.
And then you look over at the wheat market. We've had quite a bit of volatility there as well, right?
The wheat market tried to gain some ground last week. It was certainly a laggard when compared to corn and soybeans. If we can get out above 560 in that May contract, potentially you start to see some short covering. Short covering in the wheat market has been tough to come by in a meaningful way. Funds have been net short since June 2022. So they've been defending a net short position for several years at this point. At some point, that tide will probably turn. It's just what is going to be that catalyst. And right now, I'm not so sure that there is one, but you could start to see a small wave of short covering if corn and beans can continue their momentum to the upside.
All right, you said a word and I can't get it out of my head, so I'm just going to say it, and I have no idea how it fits into the sentence, but a catalyst in the cattle market. What's driving the futures there? We'll come back and discuss that. Market Day Report continues in a moment. Higher. Let's go back to Chicago. Oliver Slope, Blue Line Futures. What are you watching here?
Well, we're keeping an eye on the outside markets. Last week, the cattle complex was largely influenced by those outside markets, and it was really just a broad-based risk-on or risk-off trade. And you saw the big ranges intraday and intra-week on the back of that. We're starting to see the volatility in those outside markets subside a little bit with no real escalation over the weekend. So I wouldn't be surprised to see that lead to some more narrow trading ranges throughout this week's trade and lower the volatility. And if that happens, hopefully these cattle markets can get back to focusing on their individual fundamental and technical landscape. The cash market last week, I think the 5-area average on Friday afternoon, just above 207. So there's some fundamental strength in that cattle contract to be aware of. Resistance levels, $2, psychologically significant in that June contract. If we can get above there, potentially we go fill some of those gaps from the last couple of weeks, with the big one coming in near 204.
All right, let's turn to the dollar index. And again, on that dollar index, we've seen quite a movement to the downside. What's driving that lower?
A lot of geopolitical fears and the tariff concerns obviously moving a lot of the broad markets that we had just kind of touched on, not just the currencies, but you're looking at interest rates too, and those are kind of pushing and pulling each other. Ultimately, I think we've probably gone a little bit too far too fast. So I wouldn't be surprised to see a reversion to the mean in some of these markets, including the U.S. dollar index. And ultimately, as I've mentioned, I think we start to see some of these trading ranges narrow a little bit, that volatility come out, and we can get back to somewhat of a normal trading range again.
All right, Oliver, great to see you. Thanks for the insight. Oliver Slope is with Blue Line Futures. All right.